This is a candle by candle analysis for a trade that I took last Tuesday. Last week was a relatively quiet week in terms of day trading for me. I was only able to trade on Tuesday because Wednesday I was busy and Thursday nothing actually happened in the market. And so I don't have a live recording because I don't normally record Tuesdays. So this video is a way for me to continue working on improving my trading game and also for my trading partner to see what I was thinking when I was taking the trade. It's difficult when you're trading by yourself, or even if you have a group or a partner to trade with. You always have to be constantly looking for improvement and pushing yourself. And this video here is my way of dedicating some more time into my trading, analyzing my trade to see if there's anything else that I can do better. So this was my PIP report for the day, 20th of June, which was last Tuesday. I had a few pairs on my list, and the pair in focus today is going to be the Aussie Yen. This is what the Aussie Yen looks like before the trading session started. This is what I was looking at 6:30 AM London time. So for this pair on this particular day, I was looking for a move to the upside. And looking at the price action during the Asian session, I can see that buyers had one attempt to push higher, but they were not successful. And so price ranged for most of the session, and then leading up until the London session, I can see that there is a potential for another push up here. This candle in particular is a very promising sign for a breakout. So my plan for the day was to watch for a breakout that makes a new high. So the high set during Asia has to be broken. That is the confirmation that I need in order to say, okay, that's the sign, that's the signal that I need to look to trade. Once that has occurred, I would then look to go on a small pullback using a buy limit order. It's a typical way that I trade breakouts for day trading. So this was the plan. Let's see what happens next. As you can see here, the breakout did eventually happen, but it wasn't as strong as how I would imagine it. Buyers were able to break above that level and also close above that. So the signs were there, but because this is a discretionary strategy, I have the choice. I can either trade it straight away or I can wait for further confirmation, which is what I did. So I waited for one extra candle. This one came up. It had a higher high, higher low, but the close is actually below the breakout level. So I'm undecided whether or not this is a strong move. This is a strong breakout that I normally trade. So I continue to wait, and I waited for the next two candles to come. This candle here actually closed, the entire candle closed above the breakout level. It set a new high once again, but the upper wick is rather long, which tells me that there is still a little bit of selling pressure holding back buyers on this level. Moving on to the next screenshot, you can see that once this candle has closed, I was convinced that this move is strong enough. Why was that? The reason why this candle convinced me that the breakout move is strong enough to trade is because the entire candle is above the breakout level. Even though it didn't set a high compared to the previous candle, it had a higher low, and the close of the candle is also very good. So at this point, I say to myself, I waited and waited and waited. Buyers are continually making higher highs. They're making higher lows. Everything that I look for in a breakout to the upside has been met. And I go in with a buy limit order looking for just a small retrace. Got my stops and targets in. Let's see how this one turns out. So this is how the trade eventually unfolded. Price retrace, fill my buy limit order, and then continue to go upwards. This candle in particular was very promising to my trade because it's a strong push up. After that, price continued to range and it went sideways for a while. Even during this sideways movement, there was still promising sign. signs which told me that I should be in this trade and I would continue to hold. Even though in this ranging period here, buyers was not able to make a new high, but the fact that I can see higher lows continually being made is something that I can use to support my case. I trade purely with price action, and I only look at the candles to tell me whether or not I should be in a trade. At one point, price got up to 85.08, which was only 7-8 pips away from my target at 85.15. So at that point, I was fairly confident that this trade was doing well. Still, my stop was not moved at all because I leave my stop where it is to give space for price to move. Then we have this candle, this big bearish candle. This is the first warning sign that I got, which tells me that sellers are now in control of price. At that time, it was only a warning sign. There was no need for panic. There was no need for me to exit the trade or to take partial profit as yet, but it's a sign nonetheless, because it erased completely all of the progress that buyers have been able to make during this period here. All of that effort was wiped out in one single candle. So I took note of that. I said, okay, I need to be watching this very closely. And if sellers continue to push down, I need to watch how they react when it comes back to the breakout level that I traded before. If that level now is acting as support, then I may still have a reason to be in the trade. If there is no evidence that the breakout level is acting as support, then there is no reason for me to be in the trade. I entered the trade on the basis that I believe buyers are taking control. I believe that there is a breakout happening, and I waited for signs which supported my belief, and I stayed in the trade as long as I can see evidence from price action which supported my theory. At some point, if price is going the other way and I can see clear evidence that my theory is no longer correct, I would exit the trade, which was the case. So 2 candles after that big move down, sellers managed to push below and actually close below the breakout level that I was looking for early on in the day. And at that point, immediately I closed the trade out on the open of the next candle, because like I said, I no longer have a reason to be in the trade. So I took a smaller than anticipated loss. At the beginning of the trade, I had a 10 pip stop and I exited the trade for 7.2 pips. So that's a 70% loss. So I saved a little bit. Not much, but it's a process that I do, because if I only trade based on what I believe, then I'm gonna get hurt for all sorts of reasons, particularly for day trading where price can turn around very quickly. And in hindsight, now looking back, this was the right move, because this was literally the turnaround on this pair. If you go back onto the daily chart last week, you'll see that the Aussie yen had a strong push up. Tuesday, it turned around completely. So if I didn't exit, I would have taken a full loss anyway. If I was not trading with a stop because somehow I hoped it would turn around, I would have been completely wiped out. So this has been my candle by candle analysis for a trade that I took last week. I hope you enjoyed the video. I made this for you, my trading partner, and also for anyone who's interested and curious to how I interpret price action. This is how I do it. Thank you for watching my video. I'll see you in the next one.